Welcome back to Cryptocurrency Theory, guys. Now, a lot of people have been reaching out. I just wanted to say, kind of answer the question, because people have been personally reaching out and saying, hey, is there a way we can follow you more? Or is there this place that you are other than YouTube? At the moment, I am not on Twitter X. I was banned going on almost a decade now because I exposed a lot of scammy things that were happening in crypto back in almost a decade ago. And just never went through the links to get back on it. And we are kind of disconnected from that whole world completely. So I just wanted to answer that. Now, secondly, tomorrow starts kind of an important day. All right. Fed chairman, Jerome Powell, he is going to be delivering a speech on Wednesday. They are going to be having a meeting tomorrow and into Wednesday to discuss what is going to be going on with the future of our economy. Basically, it's my personal belief that I think we're about to start seeing a cycle into cryptocurrency, potentially a super cycle. We are going to see some of this liquidity rotate from the mainstream investment world into the crypto world. So I want to discuss that here in this video. So I think the best way, guys, really just to analyze the data for yourself. It's pretty obvious. Most companies are, if they're not in the artificial intelligence department, if they're not in tech department, the S&P basically is being carried by just a handful of companies. And really, when you start looking at the valuations and the data behind some of these companies, not only is their stock potentially very close to experiencing some turbulence, but their entire companies are experience debt that they simply can't service. And when they can't service this debt, guys, we're going to see not only probably likely not all-time highs, but we're actually going to see for the first time in a very long time a contraction in the S&P 500 and the broader stock market, and potentially around the world, because a lot of these exchanges are interconnected and they're potentially going to implode. And imploding doesn't mean a Great Depression, but there could be. But imploding means a modest percentage gain. Like if we retract in the S&P enough to pretty much scare out the last decade that is a retail trader, companies that can't even service their own debt, real money that understands that these paper products are imploding will also vanish, and you'll see like major investments start unwinding or unloading their stock, and it's going to be a domino effect. But also what I think is that given this scenario, we could see a capital rotation into these coins that are debt free. They're based on debt free accounting systems, or they're based on decentralized computer software that have numbers of coins that are ever going to be in the market to buy. So we're literally talking debt free. There's not really any debt connected to a lot of these coins that we're talking about. Moving into this Fed meeting tomorrow and Wednesday, we're going to finally start to see kind of if this is actually going to be really happening, with sovereign wealth funds, hedge funds really pouring into the crypto sector. The Fed chairman also is in a very challenging spot. If he cuts rates too aggressively, if he cuts rates at all, really, at this point, we're going to see massive inflation again. And really, the average person can't really sustain already with that inflation in place from the loose monetary policy that we're still seeing play out into the general economy, which is going on 6 years now, guys. An idea of that money printer is literally, we're still seeing aftermath of that, and we will continue to see aftermath from that. But basically, if he drops the rates, it's over for the American economy. The unemployment, I think, is already raised to around a little over 4%. You'll see massive companies not be able to service their debt. Layoffs will trickle down into the economy, and then potentially bankruptcies. And then basically it's going to retract. And again, it doesn't necessarily need to implode. If it does implode, it would just be a more devastating based on magnitude. But even if it just retracts any type of into a bear market scenario, where we're in a bear market for a potential amount of time, and then the economy, they're forced to cut rates and basically drive inflation much higher and crash the economy. It's going to be interesting. I mean, this is going to be one of the first times they have to publish about the conflict in Iran to report on, they're going to have to take all these things into account. Oil prices, and just basically have to also worry about just keeping their positions relatively relaxed enough where it doesn't spiral out of control as well. Because if they go aggressive into either direction, we're looking at a pretty good amount of chance that they're just going to kind of keep these interest rates currently where they're at. And I think with being at 3.5 to 3.75%, there's not a lot of room to wiggle in each way, guys. I mean, the average American, they are basically, it's like the worst forever. They're not even servicing their debt as we speak. Companies, the S&P companies, like I said, if you're not a tech company, you're not an Apple, you're not a Nvidia, you're not carrying any weight in the S&P anymore. You're just basically there's no new growth really. It's basically they're companies that are going to not be able to service their debt. The U.S. military debt interest on the debt on the interest on the U.S. government is higher than the budget of the U.S. military, guys. I mean, just to put everything in perspective for you. So when a company that is supposed to be the strongest one in the world can't service its debt, and the debt interest is more than the actual military, I think that's a pretty clear problem that there's going to have to be a capital rotation into something that is not connected to all this debt. Everything is connected onto debt, guys. We're going to see smart money that understands this paper system, and they're going to come into crypto because it's not connected to all these problematic situations. Because if you have a certain amount of coins, like if you have a certain amount of Zcash that you hold today, it doesn't matter what happens to the world's debt crisis, guys. There's not going to be any more opportunity for anybody else to buy these set finite supply coins. Like I said, the market caps of a lot of stuff we're talking about here on the channel are not as big as Bitcoin. It's not as big as companies that are on the S&P. So it's a pretty big opportunity, guys. Just in the top 50 to 100 coins. We're not talking about jumping in on a meme token. So obviously no guarantees, right? But if this does happen, if this phenomenon does happen, we're going to see people rotate out of these inflation-ridden stocks into something that is disattached from all of this debt. Smart money guys, they know exactly what's happening right now. They're looking at the S&P, they're looking at their profits, they're looking at how it's performed, and it makes absolutely no sense. And if I would go as far to say, if the dollar loses 15% of its buying power, ask yourself whether you're a modest retail investor or you're in charge of a hedge fund. Would you rather have your debt in dollars or in these debt instruments in the S&P, like a Nvidia or an Apple? Or is that 15% drop into something like Zcash or Bitcoin Cash or some of these low market cap, finite supply, fixed supply cryptocurrencies, guys, that have been doing fairly well over last year? I mean, if we look at the entire crypto market, the coins that we're talking about are outperforming pretty much any S&P stock. They're pretty much outperforming most of the stuff that you're going to see on the S&P. They're outperforming it by several 100% in some cases as well. So I don't know. I think that people that are looking at this data, guys, I mean, we scratch the surface layer here on the channel because we've known what is going on. We know that the root problem hasn't been fixed. So unless people are going to be, losing another 15% on their buying power, whether it's high gas prices, whether it's the oil continues to rise in price, whether conflicts, exist, people only have so much of the upper limit that they can take in their budgeting because they're just simply not prepared for the cost adjustments. And if say those cost adjustments do go up and the stock market has a retractment period as well, where we see a couple years of red with the S&P, which would be devastating, right? Especially if you're an older investor and you've been in the markets for decades. So I think people will be rotating some of that capital into, like I said, some of the coins that we talk about here on the channel. Zcash is one that's performing well. but other coins, even like Dash, Bitcoin Cash, and some of these coins, Neo, because the market caps are so small. They're even small in comparison to when I first got into cryptocurrency back in 2017. So just to give you guys a scope of how much growth could occur in a very short amount of time, I think crypto is definitely a recipe. So let me know in the comments, guys, what you think.